Thanks very much, Lorian. The joy of speaking at a two-day blockchain conference is there's been somewhere between 30 and 40 speakers that have that talk at the event. So to stand up and say something different and not repeat what you've heard already is sometimes of a challenge. And you will pick up that in my presentation today there are some consistent themes and nuances that have come out, but hopefully you'll still enjoy the discussion. So Lorian's done a great introduction, thank you. And essentially what Strate does, Lorian described it briefly, is in simplistic terms, we keep in a record of who owns what shares on all the stock exchanges in the country. And every day that database is updated with the buyers and the sellers. And if any listed company wants a list of who their shareholders are, we're the ones who provide that list to them. And about 80 billion rand moves through the system on any given day. So we are a systemically important financial market infrastructure that's highly regulated in the country. But as we said, we started to explore, is blockchain going to disrupt us? And that's what I'm going to debate and challenge that notion today. So this is a Peruvian economist. Her name is Carolette Perez. And she has done some amazing work on previous technology revolutions. And if you look at this timeline that she's put up, she says that they come with remarkable regularity, and the way that they happen is in almost exactly the same form. So roughly every 40 to 60 years, we've had some sort of technology revolution, the last one being in 1971 with probably the birth of the internet. And we're at the point now where we're due for the next one. And the question is Satoshi's paper in 2009 the next one? And in my view, it is. And we're at the birth of that one. But the pattern that comes up is that you have this eruption, and that's not a typo, by the way, in her, that's the way she spells it anyway. And then you end up with this gilded age where this capital like pours into this industry. And you end up with a bubble and a crash. Sound familiar? And at that point, the regulators step in. And then you enter this era of a golden age and maturity. And this cycle can take sort of anywhere between 40 and 60 years. And then you will find that the next technology revolution comes along. And I really think that we're probably somewhere between the eruption and the frenzy stage right now. I know that this point about what gift did blockchain and Bitcoin give the world, this has been touched on over the last 2 days, but I want to just present it slightly differently. And when you're in this space, you sometimes need to take a step back and actually remember what you're trying to do here and you know, not just apply blockchain to everything. And I always use the example to say the only way for me to give 10 Rand to Lorian, for example, in the past, was that him and I needed to be physically present in front of each other. And I would say to him, Lorian, here's the 10 Rand, he would take it. The other way to do it was to find somebody that you trusted. A taxi driver going to Zimbabwe, a bank to do an EFT, etc., etc. You would find somebody to do it on your behalf. And the gift that Bitcoin and blockchain gave us was the ability for me to give that 10 Rand to Lorian peer-to-peer in an electronic fashion without going through those parties. And I know this point has been hammered to death, but sometimes I don't think we realize how many trusted independent parties or independent parties we deal with on a daily basis. And they could be anything from identity to, you know, to someone like Strate to move your shares around. So what I'm going to do is just pick on the stock markets because that's my business, and the securities markets. Right now, if two people want to sell shares to each other, very simple transaction. I want to sell you 10 Anglo shares. There are currently 13 intermediaries in the chain that get involved in this. All right? 13 other parties. Well, there's 13 in the whole ecosystem. Take away you and me, and perhaps we need an exchange. It leaves roughly 10 or 11 parties in that chain. That is the way our markets work today. Clearing houses, custodians, brokers, market makers, a CSD like Strate, the regulators. This is what is involved right now. And the promise of blockchain is obviously this magical blue box that sits in the middle that is going to allow us to interact in this peer-to-peer way. And I apologize, I see that I'm missing one party here. I don't have the issue of the listed company here. I should have added that in. But really, we went from this diagram to this diagram, and that's what blockchain has promised us to do. So really, these trusted independent parties are the ones that are theoretically ripe for disruption. But in reality, these organizations are highly regulated. They're systemically important to an economy. Society trusts them in very many ways. And a regulator is not going to throw them out overnight because some tech has come along that could replace them without fully understanding what that is about and what they do. So I like to say that blockchain is not going to disrupt those parties in the short term. There is a timeline here. Blockchain is going to go and disrupt the trusted independent parties that have failed. Central banks that have failed, some neighboring countries, Venezuela, identity, Equifax hack. Alexia just spoke about the Ghana Deeds Registry. What's the first project they're doing in Ghana? Putting property onto a blockchain. Where the trusted independent party has failed, those industries will be the first ones to go down. Next, blockchain is going to come to industries where there is no trusted independent party. Listen to the examples. 3 years ago, Strate was going to be the first one to fall. Yesterday, the examples are, no, we're now going to look at trade finance, syndicated loans, food origination, if that's the right word. These are industries that don't have a trusted independent party now. They are reconning, they are inefficient, they are expensive, and blockchain has a huge amount of promise to those industries. And then finally, we're going to see disruption to those trusted independent parties, but I'm going to argue today that it's in a different way to a fintech startup coming along and taking them over. And that's when I will get into my favorite topic of the ICO space. So I want to touch on what is happening in the financial incumbent world. My view is that, and I struggle to find a stat, by the way, of how much money the incumbents are currently investing in blockchain. But it's somewhere, there's stats out there to say it's roughly about $1 billion US. You cannot have organizations spending this amount of time, money, and effort on blockchain projects and nothing happens. Something's going to happen. It's a matter of time. We'll get to a tipping point and something will happen. But right now, the projects that are going on are in what I call the old world or the incumbent space. So the first one is people are doing this as a technology upgrade. A lot of the financial institutions haven't done any major upgrades to their systems since the Y2K bug prior to the year 2000. So they say, and let's do a big tech upgrade. And at the same time, they bring some efficiencies to the process. They might be able to cut out some costs, achieve some latest international standard, but it's a pure tech upgrade. And also, I've put that word there, technology misnomers. There's also a misnomer out there that the current tech can't do what blockchain can do. Strate can settle right now in real time. It's not that our tech can't do it. It's just that the market doesn't operate in that way for various reasons. So we have to sometimes look at that. The next thing is you've got to tick the blockchain box. So this is what I do for my day job. I'm working on an amazing blockchain project to put proxy voting onto a blockchain for all listed companies. We will take this into production this year with the financial markets, and it's an incredible project. But right now, the organization is not about to put our core clearing and settlement system of 80 billion rand onto the technology. But at the same time, we're experimenting with it. And a lot of these projects, I think Fazam touched on this point, could have been done on a central database or in another way. But you want to tick the blockchain box. Right. Then the next one is the competition from the tech providers. So I'm not necessarily saying that a company like IBM is doing this, but there are tech providers out there building blockchain ecosystems where they might start to actually compete with their clients. In the old days, they used to sell that tech to their clients, but now they're building something where they could actually sell it directly to the community, and the client, like Strate, could become, I don't know, the regulator or the person who keeps the permissions of who can access that system or something. And the other part is this fintech startup battle. And, when you speak to a lot of fintechs, they're doing stuff in the retail space. If I can give you an example, 97% of investment on the JSE is held by institutional investors. 97%. 3% is held by the man on the street. And these fintech startups are squabbling amongst themselves over the 3%. But to go and try and disrupt that industry, where 97% of the business exists, is very, very challenging for these startups. Then we have the Oxwagon Lager. So those are the consortiums. We are members of one, and these things are interesting animals. They can be slow to move. They don't want to disrupt each other, so they'll work together. But the ox wagons join together and form the lager. And also, I think that touches on some of the points about these groups often work on these projects that can stop reconciliation and bring trust to industries where there was no trusted party. And then the odd financial house is looking in the crypto space. So anything from providing wallets, there's been a few people who've applied for ETFs and exchange platforms. But the question really for me sits is, does this ICO space have the ability to disrupt capital markets, and is that really where we will see the difference? So now that I've set the scene about the old world, I want to say that we are not going to get two worlds that will merge, but rather we're going to end up with a parallel road. There's going to be two worlds that will emerge out of this entire space. And instead of the old world, if I can call it that way, trying to come into the new world is operating here on the side, and it's going to rise up and start to challenge that old world. So capital, for example, that used to flow into the old world, into the old stock exchanges, into buying Anglo-American shares, it's now going to start going into this crypto space. And there are many people who years ago used to have a debit order that used to go and buy Satrix 40 shares every month. Guess what they're doing now? They're buying Bitcoin instead. All right? And it's very much like a retailer at some stage who's got a physical presence, and what they're doing is they're going and building a website that's got a homepage. But what's happening on the side is that Amazon is coming along, and it's fundamentally changing the way consumers shop and the way we actually interact with each other, as opposed to just having a website and ticking the box that you've done the website. And for me, it's very difficult for the incumbents to get into the other world, but this other world is going to rise up and challenge that old world. So this is my disclaimer about ICOs. It's in half an hour. I don't have time to start saying, yes, they're risky. Yes, some of them are scams. Yes, X amount will fail. I don't have time to do that today. But I want to say, just give them a bit of slack. There's entrepreneurs out there with good intentions. Somewhere between 75 and 90% of all startups fail. So somewhere between 75 and 90% of ICOs are going to fail. But the visibility around who they are and what they're doing is so much higher than some startup operating out of their garage where they've got no presence. So my disclaimers today is to say, please, I understand all the risks. I know about it, and we can hopefully get on to a different conversation. I love this quote by Balaji. He says, in the same way as the internet became the biggest library in the world, the ability of blockchain and tokens will now make it the biggest stock exchange in the world. And for me, this is a very, very powerful message. So I've got 7 points to raise. Let me look. I'm going to have to speed up a little bit. The first point is the rise of regulation. So regulators are now getting into the space because it's really moved from a community to the man on the street. And the man on the street is now getting harmed by it. And what's happened is if you look at a website like IOSCO, there are now 64 statements from regulators about ICOs. That's how many have been issued in the last year or so. It's really moving on. The other one is this application of the Howey test. So we love to quote the Howey test. I don't know if people all know the story. This was two brothers. They, in 1932, bought a tract of land in Florida. And what they did is they sold pieces of that land to investors. And then they, in the agreement, would lease that land back. And they would plant some orange trees on that land. And then any of the profits from those orange trees could go back to the people who had invested originally. And just after the war in 46, the SEC at the time, it had a different name, took them to court. And they found that this was deemed to be a security or an investment contract. And the reason that they said that was, first, was it an investment of money or assets? Yes, it is. Is there an expectation of profits? Yes, you hope to get the money off the orange trees. Is it an investment in a common enterprise? It was one big piece of land that everyone had bought. And then the final one, and this is the important one, did the profits come from the efforts of a third party and not from your own? And that in the ICO space is the one that is catching people out, why many of the ICOs are now in this gray area of getting into the security space. And if you look at it, it's substance over form. They are securities, okay? And I've just tried to separate here the difference between the securities token and a sort of a utility protocol token. There's been some brilliant work done on this. The Crypto Asset book by Chris Bernski, he writes some very, very good definitions around this. An organization called Brave New Coin has just issued a paper that categorizes them in a slightly different way. Well worth a read. But here on this particular one, I'm really trying to get this message across to say that this concept of us avoiding the issue that these things are not security tokens, we're beyond that point. A lot of them are securities, and we need to treat them that way. And for me, that is where the exciting part lies. So the next point I want to make is around the maturing rates of ICOs. And the word history or historically there is in inverted commas because history in this context means when I used to do this presentation 6 months ago, that's what I used to say, and this is what I say now. So you know, I'll go through it very quickly. It's an unregulated means of crowdfunding via cryptocurrencies. Many ICOs today are accepting fiat. The companies are purely blockchain companies. Actually, there's nothing blockchain about some of these ICOs these days, other than the way they issue in the tokens. But some of them are trying to build oil rigs in Russia. They don't belong on a blockchain. The fundraising is from an international retail base. Lately, you know, all the venture capitalists and the institutional investors are now trying to get into this space. The tokens are available to trade on a secondary market through an unregulated exchange. We've seen moves for regulated entities to get into this space. Issuers can raise capital without giving away ownership or debt. Issuers are now acknowledging that these things are securities, and you can do fundraising without any due diligence. I just want to say, I think it was Trisha yesterday that said that it was the most stressful process for her to go through an ICO. To go through an ICO now is sometimes you actually undergo more scrutiny than if you'd gone through a traditional IPO. Really, the days of the pump and dump and, you know, people are not even reaching their minimum fundraising levels right now if they haven't done a proper due diligence and a proper process. So I think that the cowboys are getting weeded out of the system, and it's happening very, very quickly. The next point I want to make is the pressure on the IPO market. This is some stats put out by Pricewaterhouse. If you want to list a company on one of the stock exchanges in the US, you're roughly looking let's put it in the ICO bracket of fundraising, between $7 and $14 million to do that. That is how much it costs you to pay the lawyers, with all due respect to Alexia, and the bankers. That is what it costs. An ICO, roughly, if you're doing it properly, can cost you about $400,000 right now. So these are the differentials. And what the point is here is to say, if a company like Mercedes-Benz right now wants to raise capital, and you can do it in a legally compliant way via an ICO, or go this way through the New York Stock Exchange. And these are the costs. And the annual cost, by the way, is also about $1.5 million US ongoing. I think that organization already has credibility, already has trust. I think they're going to start to question whether they still need to be going this route if they want to raise money in future. And we've seen it. This is something called the US listing gap. It's the trend at the moment between the number of companies that have listed and delisted off NASDAQ in the last 40 years. And yes, I know all ICO graphs peak to the right, but this is the ICO numbers in the last 4 years of what's happening in our space instead. And then we move on to the Millennial Investor. So these numbers are relative. This is as at the end of December. So the price of Bitcoin was just under $14,000 US. I know we've had an interesting 2 or 3 days now. But at the end of the day, as a millennial investor, when you can look that you want to invest in gold, equities, bonds, or you want to put some money in cryptocurrencies, you can see where the appeal sits. And I'm going to go through a survey that was done by a company called Legg Mason Asset Management. They interviewed millennial investors internationally, and they said to them, how much influence did the financial crisis of 2008 have on your investment decisions? If you look there, I think it's 83% was somewhat influenced by what happened in that crisis. Ironically, the baby boomers, who were the ones who actually lost a huge amount of their wealth during that crisis, don't really feel that their investment decisions are affected by that. The next one, how much money would you put into equities and fixed income as opposed to putting into alternative assets? Look at the difference between a millennial and a baby boomer of how much money they want to put into those traditional assets instead of the new assets. This survey was done, by the way, at the beginning of last year, beginning of 2017. So this is not at the point where we had been through the ICO and Bitcoin bubble and hype towards the end of last year. The next thing is, how optimistic are you that your portfolio will perform in future? 57% of them say they're very optimistic. Baby boomers say they're 17% optimistic that that will happen. Are you willing to take on more risk? I think we're up to 79% of millennials are willing to take on more risk. And this is before they had seen the returns that we saw late last year from cryptocurrencies. They're willing to take more risk than before. And then finally, what percentage of your assets do you hold internationally? They're holding 88% of any investments that they have offshore. They want exposure to an international market. So for me, these are very, very interesting numbers. So just to summarize perhaps some of those points, in the millennial generation, we are developing a culture around the ability to invest peer-to-peer. You only have to lose your private keys once to realize you mustn't do it again. All right? And that generation is learning that. It's going to become second nature to them. They're not going to rely on a custodian or bank or something to keep that information. By getting into this space now, they're getting used to, actually, that's the way you invest money. You take responsibility yourself for it. Okay? They're also wanting to get into early stage companies. Hey, who didn't want to invest in Google 20 years ago? All right? And that is the appeal of putting your money into some of these ICOs. There's immense wealth in the crypto world. Some people bought Ethereum at $7. All right? And they're not wanting to cash that money back out into fiat. They're wanting to keep it in this crypto space. And they're knowledgeable about blockchain, and they really want access to the next type of company, the next decentralized organization, the next protocol, the next, the token economy. They're wanting to move into these types of spaces instead. Now, this is a rather bold figure, and I won't stand behind it. And it was put out by a company called Polymath, which are claiming to be the Ethereum of securities tokens. The global equities markets have taken 416 years to get to a value of $70 trillion US. It started with the Dutch East India Company in 1602, was the first company to list on the Amsterdam Stock Exchange. Polymath are saying that securities tokens within the next 2 years will reach 10 trillion. And that's how fast this industry will move, from 100 million today. And that's their estimates. Take it or leave it, it's a figure that's out there. And then finally, I wanted to raise this point around that the GAFAs, and there's different acronyms for this, but this is Google, Apple, Facebook, and Amazon. The GAFAs of the future will potentially be protocol companies, or economies, I should say, in some ways, or they could be some sort of company that has raised funding of a security via an ICO. And it will take time. I know when you look at this, you can look at this in two ways. You can say, sure, it took 5 years for the kids of Silicon Valley to overtake the oil barons. That's one way to look at it. The other way to look at it is to say, well, actually, the likes of Apple and Microsoft were established in the 70s. Google and Amazon were established in the 90s. It takes a little bit longer than that. But the point is that I think that these companies here at the bottom, in terms of market cap, might be replaced in maybe not 5, but in a little bit longer period with companies that are launching ICOs instead. And this is where the challenge will lie. So just to summarize, and I see I've done very well with time, just to summarize that this parallel universe is happening, and it's very, very difficult to stop it. And it's going to fundamentally, in my view, pull capital away from the traditional markets and the traditional ways of doing things. And this disruption around all the intermediaries and the trusted independent parties that we have today is not going to happen like we think it is. You will only get rid of the trusted independent party if they've significantly failed or if people stop using that business. And I'm starting to argue to say that people might stop using those businesses. They might still exist. We still have retailers today. All right? When the internet started, everyone said every shop will close down and we'll all shop on the internet. Well, you only need to look at Joburg to realize that the shops have done the opposite. These institutions will exist, but I think that they're going to be challenged in a different way than what they thought before. And that's me. Thank you.